So this video is called F Trading Psychology. This is everything you need.
Trading psychology courses, and until now they have been nothing but average. This is something that took me 4 years to figure out, and after finding this out, I was able to make hundreds of thousands of dollars just from the markets. It also took me multiple months to be able to actually put this into words and be able to simplify it in a way that I can give it to you so simply. And I knew I needed something like this because just like you, I was blowing accounts. After 2 years of trading, I was still blowing prop firm accounts, still blowing prop firm challenges, not getting a payout, not understanding what was the problem. I would get funded and I would never get a payout. And sometimes I wouldn't even get funded. And I always thought that trading psychology was the problem. And that's why in 1 year, I spent thousands of dollars in trading psychology courses. And afterwards, after a couple of months, nothing mattered anymore. And I first started understanding this concept when I started winning consistently. I would start winning, and then as soon as I went into a little bit of a losing streak, I would think, oh my God, what is my trading psychology doing right now? How can I fix this? Not understanding that a lot of the problems that arose were from the trading technicals and just mere probabilities. But every time that I was taking losses, I was instantly blaming trading psychology, not understanding what do I need to do now? And there was also multiple times I had multiple instances of almost passing a prop firm challenge or almost getting to a payout to just end up blowing it in 1 week. We're talking challenges, we're talking possible payouts that were absolutely blown because of this one problem. And now you might ask yourself, well, but Kimmel, what is it? This is the thing. Trading psychology can be boiled down into one simple concept, and that is that your emotions are a reflection of the difference in your expectation and the reality.
Ooh, that's pretty good. Let me go back. Difference in your expectation and
your emotions are a reflection of the difference in your expectation and the reality.
And I think that that's really important here. That was a very strong intro, by the way. Kept me engaged the entire time. Well done on that, Kimmel Trading. First video I've watched from this channel. One of the things that I say, in fact, I have a slide for this whenever I trade, and it's always that. Just my slide real quick. I have no expectation in the trade. I have no expectation for how much money I'm going to make in the trade. There's 4 possible outcomes. 1, a big win, 2, a small win, 3, a break even, 4, a small loss. There's never going to be a time where I hold on to something and take a big loss. It will never happen. But I don't know the outcome of the trade ahead of time. So I have no expectations for that. I have no profit targets. I'm not saying if I get into this trade, I'm only going to get out if I make $1,000. I'm only going to get out if it reaches $54 on the stock price, right? Not having a profit target lets it be open-ended so you don't anchor yourself to a specific point that has to happen. Because if you say something has to happen, you're going to make emotional decisions that you shouldn't have been making anyway. But then at the end of the day, number 3, all I have is a plan to get out when one of my exit signal happens. If one of my exit signals hits, then I'm out. I don't have an expectation of how much I'm going to make. I don't have a target that I'm looking for. If my signal comes through to get out, I stop the trade where it is, as it is, and then I get out. And having that expectation of what can happen definitely does emotionally anchor you to a stock that can be a huge bag that you're holding that you never should have been anyway.
Reality. What this means is that whatever you expect from the market, if you do not receive that, all of a sudden you feel like something was taken away from you. For example,
so setting that expectation and it not being met, you feel like you were mistreated by the market. Okay, I like that.
Say you are 2% away from passing a prop firm challenge. How many of you already think, oh my God, this challenge is passed, it's done? And then you enter in one losing trade. And now you're a little bit further away. But supposedly you were already supposed to pass the challenge. So all of a sudden the market didn't only take away 1% or 2%, whatever you are risking on the challenge, it also took the idea that you were going to pass this prop firm challenge. And that is where the emotions arise. That's why you went on a tilt. And that's why I blew multiple challenges even though I was close to passing them. It's because I would enter in one losing trade and then another losing trade, and then the cycle began. So this is what you should know. This is the formula for your trading emotions. Emotions equals reality minus expectation. And I can tell you something that happened live in front of all of you here on YouTube. I was live streaming on YouTube and I was running a trade that was up $20,000 on one particular trade. And I knew that if the trade would have gone to take profit, that would have been a $30,000 trade. At that time, one of my biggest trades. I had already taken partials, I had already taken $10,000 worth of profit from that trade, and I was letting the rest run to make an extra $20,000. But what ended up happening was that the market...
I'll tell them one thing right here that you should also talk about is turn off that P&L. Turn off the P&L. That is the number one thing that I tell people when they start trading. turn off your P&L. Yeah, it's exciting to see how much money you're making. But to his point right there, his profit target was $30,000. Because he had anchored himself to that $30,000, I don't know what he's going to say, but he probably is going to say something like, I made mistakes because I wanted to make sure I got that $30,000. So when you turn off your P&L and focus on your plan, if you have a profitable trading plan to start with, letting the plan work out, letting the outcome be determined by the market, because we don't know where it's going to be. We don't know how much we'll make in the trade. He might have made 29,000 on the trade. Does that mean that he has failed because he didn't hit 30,000? It very well could have been. But you need to make sure you turn off that P&L and focus on your plan. You can do your P&L afterward, but turn off the P&L so you don't get anchored to that outcome. And I'm telling you right now, just doing that alone would have saved him a lot of money.
Completely reversed, and it ended up hitting all of my stop losses, until then actually reversing and going to my final take profit. But the fact that I was trailed down and I only had a total of $10,000 worth of profit, even though I thought that the trade was going to give me $30,000 worth of profit, my mind didn't think, oh yeah, this was a $10,000 win. My mind actually thought this was a $20,000 loss. Why? Because emotions equals reality, which in this case was $10,000, minus expectation, which was $30,000. That means that emotions equals minus $20,000. So not only did I not appreciate the win, but I was actually tilted because the market has taken something away from me. And that is the problem with so many traders, is that you come into the market with an expectation that you're going to pass a challenge, that you're going to profit on your live account, that you are going to do so many things. But then when the market hits you,
all those expectations, remove the expectations and just let the outcomes be. And I know that that sounds hard. Chris, how can you get into a trade if you don't expect to win? I don't know how much I'm going to win. That's kind of a thought you could have. I don't know how much I'm going to win. I don't have an expectation. I just don't know how much I'm going to win. But I'm certainly not going to take a big loss. And if I do take a loss, it's certainly going to be a small one. Maybe that's the expectation you need to flip into is, I don't know how much I'm going to win. But you need to have that plan to know when to get out.
With one losing trade or even a losing streak, you start believing that it's taking something bigger away from you. It's taking the profitability away from you. 1 month is not profitable. That means I'm not profitable. That's why I need to tilt and I need to make this money back. But in reality, if you accept that a profitable trader can have losing months, even losing quarters, you understand that 1 losing streak, 2 losing streaks do not.
I think that's a great point. In fact, let me pull up my results from last year. Last year, I was up 92% in 2024. And I had 1 losing month. Give me just a second here. It's loading up in Excel or Google Sheets. Yeah, 91.37% returns. And I had a losing month in November. Right there. And these months weren't huge. 14%, 12%, 30%, 7.99, 6.9. None of these were like enormous. Of course, they, perspective, of course. But these weren't like doubles and triples. These were, double-digit ranges, single-digit months. And I had a losing month right there. And yet my total year-to-date return for 2024 was 91.37%. And also, you don't know when those are going to come through, right? There was June, I didn't trade at all. None of these trades happened before May. Not a single trade before May with this strategy here. Not one trade before May. So May through November, not a single trade in December, still yielded a 91% win. Right? And you can see these flat periods. They go up, come down a little bit, go up, come down a little bit, go up, come down a little bit, go up, come down a little bit. So you don't have to rush into any trades, right? FOMO is a real thing, and FOMO will cause you to make trades that you don't need to make. But you can wait, have your strategy, and then put it on when it starts working. There's no rush. There's never a rush to put on a trade. Never.
Not matter. And that's why I came up with a formula, because once I understood all of this, and this came from a lot of experience, once I understood this, I understood that the foundation is this formula. And that's why there needs to be a fix to the formula that is going to reduce emotions almost to zero. So how could I have 0 emotions in the previous trade that I said I was going to profit $30,000, but in reality I only profited 10? What I could have done is if I already expected the market to give me $10,000 worth of profit, which means expectation was 10,000 and reality was 10,000. Notice what happens. 10,000 minus 10,000, that's 0. So the emotions, because my expectations equals reality, would have been basically 0. And obviously, you need to understand we're humans. We're still going to feel some sort of emotion. It's never going to be good to give profit back to the market. But if your expectations are aligned with what the market can actually give you, you will notice that your trading emotions are going to reduce drastically, right? And that's when I thought, okay, how can I solve this equation to make my emotions be more consistent? I'm going to give you the framework for losing streaks, for trading profitability, and even goals. I will tell you from the bigger picture to the tiniest picture, which is one specific trade, because expectation and reality is in every single one of these. Trading profitability, yes, it's trading profitability, but this next trade matters. It doesn't really, but it matters in your mind to your trading profitability. So this is the one thing that you have to keep in mind. We'll start from small to large. Every time you enter in a trade, there are reasons as to why this trade is going to be a winner. That's why you took this trade, correct? Correct. But
Well, I don't know. I wouldn't say there are reasons why this trade would be a winner. I would say there are reasons why it fit my trading plan as an entry point. Not that it would be a winner, because we don't know the outcome of the trades. Nobody has a Nancy Pelosi special where they can see beyond the right-hand side of the chart that most of us can see. Nobody has that except for her. If we did, trust me, we'd all be billionaires at this point. It'd be like, Back to the Future. Rather than getting a sports almanac, you should have got a stock trading almanac. But point is, because we don't know where the outcome is, I would say just have that plan. Have that plan that historically has shown to produce profitable winning trades. And then once that has happened, then that is an opportunity to take the trade. But that doesn't mean that you've got reasons that it will win, right? Of course, if you could make the leap and say, well, if you have your signals and you've had winning trades, and therefore your signals equal winning trades. I could see that point, and maybe that's the point he's trying to make here.
But there's also reasons as to why this trade could be a loser. So for example, today, the students inside of the Simple Trading Edge entered on a long on euro dollar. But even though euro dollar is pointing to the upside, one of the things that all of the students kept in mind was that there was the possibility that the daily bearish order block that we were sitting in still takes charge and
order blocks
actually moves the price bearish. So there are reasons why the market is going to move higher. Those reasons outweigh the reasons as to why the market is going to move lower, right? But there's also reasons as to why the market could move lower. And you need to know those exact reasons. If you know those reasons, if the market does give you a losing trade, you will already understand, okay, this was exactly why. So we were at the bearish order block, maybe the weekly is still bearish. Okay, so that's why this was a losing trade. But not only that, let's add one more tiny detail. You will actually expect that to happen. I want you to do this. When you enter any trade, you know the reasons as to why it is going to work out, but now I want you to focus on the reasons as to why it is not going to work out.
I think he's trying to say the same thing that I talk about, which is have your reasons for entering, have your reasons for exiting. Not that it's going to work out, not that it's going to not work out, but this is the reason I'll get in, this is the reason I'll get out. I think we're trying to say the same thing here.
Why? I want you to expect every single trade that you enter on to be a loser. And if you do this, if the trade does end up being a loser in reality, and the way you expect the trade to be a loser is by always pointing out all the things against your trade. And believe me, there's no law of attraction in the market. There's no, hey, you attract more losers, blah, blah, blah. No, you focus on high quality setups, but you also list out all the reasons why it's not going to play out. Next, and this is important, always expect the worst case scenario, which means if the market now moves.
I can agree with that. I wouldn't say expect, but I would say plan for, right? So in my trading plan, right, I have everything written out. Everything that has happened to me over the years has helped me develop all these things that I would do, whether it's rolling up, whether it's leading into earnings, whether it's a gap down, all of that, position sizing, order blocks, whatever the case is. Every single bit of it has come from experience where I thought I had a plan and then it's like, wait a minute, did you account for this? It's like, oh no, I need to account for that right away. And then I'll make some new notes and then I won't let that happen to me again.
Moves to the upside and you are in a long and now you are able to reduce your stop loss to minus 0.5, for example. I want you to now, instead of expecting to take profit, you expect the loss, right? Then if you move to break even, what are you going to expect? you're going to expect the break even. And once the market hits take profit, there you go, you expected something worse than what happened. That means that as long as the positive emotion is not too crazy where you go reckless, then you did the right thing. So you always expect the worst case scenario until you reach take profit, right? So if you manage your trade, you expect your stop loss to get hit all of the time. And
If you expect to get an outcome, let's work through an example real quick. When I say I have a plan to get out when one of my signals happens, right? I guess you could say I expect to get out when one of my exit signals happens. So let's do this as an example, right? I expect something on this to happen. No matter what, one of these things will occur. No matter what. Hands down, it doesn't matter. Let's go to Tesla, for example. Right? I am not going to let a 100% gain turn into a 100% loss. Like, there are people who watch this go all the way up and all the way back down and held the entire time. I'm not going to be one of those people. And I'll tell you why, because I know where I'm going to get out. So for example, one of my exit criteria is the 10 EMA being broken. So if the 10 EMA isn't broken, right? So it crossed over the 10 EMA on this candle right here. This is November 5th of 2024. I'll move this right here. And let's say I got in on that day. It closed under, then closed back over. It did not close under it again until this candle right here. And I know, because it's just math, that the 10-period exponential moving average will be crossed by a stock that's going down. It will be. Right? We can look at any stock, SoFi. When the 10 was violated, right, it crossed over the 10, the first close under the 10, you could have said potentially right here. I don't know if it quite did. It was really close. But the first close under the 10, that's when the trend changed and it started to go sideways and then it started to go down. We could look at every stock out there. Palantir, with this huge move up, this giant move up, and then a close under the 10 started a trend reversal. Now, I'm not saying a close under the 10 always starts a trend reversal, but having that as an exit signal will keep you out of trouble. Meta, this huge move up, first close under the 10 got you out of the way, right? I expect one of these things to occur. And because of that, I don't have an expectation. Either I'm going to make a little bit and it's going to cross over, cross back under. I'm going to lose a little bit, or I might break even. But every once in a while, I'll be in the right stock at the right time and it'll just rocket ship higher. Those are the most fun, of course. But we don't know which one that's going to be.
And believe me, let me say this again, there is no law of attraction in the market. And yes, you're talking with someone that believes in the law of attraction everywhere else. If I believe that I'm the best trader, I'm going to act like the best trader. If I believe that I'm a really bad trader, I'm going to look for reasons that's why I'm a bad trader, and then it's going to mess my head. But in the markets, it does not matter. The market does not care about your feelings, does not care about your affirmations, right? Now, let's think about it in losing streaks. In losing streaks, you always expect worst case scenario on the first trade. Okay, it was a loss. It is what it is. It was a loss. It is what it is. It was a loss. It is what it is. When you look at the losing streak, I want you to think, this is how really good traders are going to become even better. It's going through the losing streaks. Anyone can have a winning streak, but few.
Oh, I agree with that. Going through the losing streak is what I mentioned a minute ago, helped me develop my trading plan. If I didn't have those losing trades, I wouldn't have developed my plan. And I would just be like any other trader, putting a trade on, hoping for the best. You don't have to do that.
Traders can handle a losing streak. So if you put that into your mind, that your expectation is, I have to go through this because that's the only way that I will become a profitable trader, you understand that the bigger picture will be easier to understand. Now, when it comes into your trading goals, this is where your expectations should not be set on the outcome of a specific challenge, of a specific profit on a specific month, because it does not matter for your overall goal.
I would say, as far as goals go, I think your number one only goal that you should ever have is to follow your trading plan. Market wizard Larry Hite, one of the market wizards that I worked with directly, he was the very first billion-dollar hedge fund manager. He says there's 4 types of trades: good trades, bad trades, winning trades, losing trades, right? You can have a good trade that's a winning trade, a good trade that's a losing trade. You can have a bad trade that's a winning trade, or a bad trade that's a winning trade. Bad trade that's winning or losing, right? But what you always want to have is a good trade. Irrespective of the outcome, that means you followed your plan. Either it was good and you followed your plan, or it was good because you followed your plan and it was profitable, or it was good because you followed your plan and it was a loss. because you can just happenstance into a trade and it ends up great. That would be a bad trade. That's a winning trade. Or worst of all, you don't know what you're doing. You're just putting on trades willy-nilly. And then you've got bad trades that are losing trades. Those are the worst. But you don't get to that point unless you're actually documenting, right? I have a very detailed spreadsheet, as I showed earlier, that I know every single trade I put on, why I put it on, how much I put it on at, the price level that I put it on at, the reason I got out. And if I ever need to go back and look at why did this work, I can see it. If I ever need to go back and make an adjustment to my strategy, I can say, oh, you know what? If I did change this thing, then I would have had a better outcome, a better expectancy on my trades. Maybe next time I'll do it that way too. That's how you grow as a trader. But you don't imagine your way. You don't law of attraction your way to get better. You actually have to do the work, right? And you actually need to keep good notes to know where you need to do your work at.
Your goal when it comes to trading is, I have outcome-based goals. Believe me, this year I want to profit X amount in funding. But what is important for you to understand is that if I do not hit those goals, as long as I behaved as a profitable trader, the reality does not really matter, because
as long as they're good trades. And good trades meaning you follow your plan. Okay, we agree with that.
Will be closer to those goals. And that's how you have to think about it in the bigger picture. And if you don't expect those goals to be hit, but you move as if those goals are going to be hit, so your expectations are basically neutral. While you have a big goal, if you do not hit the goal, you will be able to think, okay, I did great. I'm way closer to achieving that goal. Yes, I did not achieve it this year. That's fine. I'll do it next quarter. I'll do it next month. Doesn't really matter. What you need to understand is that trading psychology does not matter. And again, a lot of people will hate me for this, but if you're stuck until the end, let me tell you, trading psychology, it does matter. But the reason I'm doing this video is because people put too much emphasis on trading psychology. They think it's the only thing that matters, when in reality, trading psychology, when you are not profitable yet, when you do not have yet a statistically profitable edge, is 10%, and your technical edge is 90%. And then once you are profitable and once you scale up, that's when things flip around. Okay, now you are putting more size. Now you're seeing more profits. That's when trading psychology will be a big, important factor, right? Keep that in mind. But even then, you do not need to spend thousands of dollars in trading psychology courses, because it's all about expectation and reality. If you're feeling emotions, ask yourself, what was the expectation on this trade? What was the expectation on this month? What was the reality? How can I reduce my expectations?
And you know what? I think he and I say the exact same thing. Different ways to describe it, but I think we're saying the same thing here is, when you put on a trade, don't have an expectation. Don't have a profit target. Right? Don't be one of those people who come on YouTube and they're like, oh, look at AMD. Because of all these reasons, it should be a $250 stock by the end of the year. Should is the most dangerous word in all of finance, because should will lead you to do things that you should not be doing. But at the end of the day, if you don't have an expectation of what will happen, then you aren't emotionally tied to the outcome. And when you're not emotionally tied to the outcome, you can be objective and you can follow your predetermined plan with the edge that he mentioned earlier. I think that was a pretty good video. Clearly a little bit of difference there, but I know that he definitely has his heart in the right place. So be sure to tune in tomorrow, where we'll be covering more videos just like this, where outliers like us save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of them, and I recommend you come back tomorrow. We'll talk soon.